listening to Kaya Biz. Kaya Biz with Gugu on Kaya 959.
It's my house.
It's my house on Kaya Biz.
Yep, it's my house. And this is where we talk about all things to do with your residential property and areas and elements to be cognizant of. Now, you might recall about a week ago, we hosted a conversation where one of our guests had highlighted that for many who are looking to create value on their property, you might look to upgrade it using different aspects, right? Others look at actually upgrading your property by installing a swimming pool. Others consider adding a granny flat or back rooms in order to generate additional income. And whilst it was made clear that ultimately these kind of investments need to make sense financially for you first, and also understand whether they are there for purely your enjoyment or if they will add some kind of economic value to your property. You also need to be aware of any costs and taxes usually that might be affiliated with these particular upgrades, specifically if they are going to generate some kind of revenue for you on a month-on-month basis. And today we're going to unpack this further with a property and tax expert from Tax Edu Zere, that's Shillyboy Mothiba, who's going to give us some insight into how it is that you need to be cognizant of tax implications specifically on your rental income and additional income drivers from your property. Shillyboy, welcome to the show.
Thank you so much, Gugu, for having me, and good evening to the listeners. And you too.
Thank you. Well, we're excited to have you with us, even though we're anxious, right? Because when we think about tax, it's like, it impacts everything, right? And
I get that, yeah.
Yeah, and I think we take it for granted that with any kind of new revenue stream, there is usually or likely going to be some kind of tax impact. So I think let's start off with an overview of some of the tax considerations or areas where there's these costs and levies and fees that usually creep in, specifically when one is trying to create an additional form of revenue streams for themselves when it comes to their property.
Thank you so much, Gugu. You're correct. Every time when people think of tax, there's an element of anxiety that kind of go up, right? So, and I think that's correct what you're saying. So the moment you are any form of an income, in this specific, we're referring to rental income, you need to start thinking that, listen, I've got an obligation from a tax point of view to start disclosing such kind of my taxable income that I'm generating or earning as a form of rental, and then submit those particular information with SARS.
Exactly. And you're quite right, because I think a lot of us actually might have properties with back rooms, might be getting some extra income, yeah. And I guess we take for granted that there's a tax implication there.
You are correct. There are a tax implication for any form of income from back rooms. Like what you said earlier, to say that people might be looking at that extra, income because, you've got that extra space at the back of your house, and you're like, listen, what can I put? Can I put a swimming pool, like what you just said, or should I put that granny house or a cottage? And you don't make that a little bit of like 30 grand or a 6 grand per month, which can go a long way, right, in this difficult economic climate. So now, but then you still need to understand that when you're generating any form of income, you've got a responsibility to pay tax, right, as long as you've got what you call taxable income. So to get into this is that once you've got those particular generating the rental income, then you need to then disclose that. One of the things that I need to highlight is the fact around the issue of provisional taxpayers around that. So most people are actually not even aware that the moment I'm generating taxable income, that actually even includes rental income. That is, those rental income is more than 30,000 rand. Then I've got a responsibility now to be what we call provisional taxpayer. And you can ask what even that means. It means now when you submit your tax returns, you are required now to submit your tax returns like a professional taxpayer, which we know is like pretty much every 6 months you need to submit those professional tax.
And
so most
stressful.
people sorry?
I'm saying that's stressful in terms of the admin that's required.
Exactly. It can be, but then what I was going to is it actually can end up leading to penalties, because we all know that if you don't submit your tax return, it can lead to those penalties and interest charges, and which is something that we don't want it to happen.
I'm keen that you also mention that, because I think even when it comes to rental income, sometimes we get confused, right? We think, oh, well, it might be an apartment in the northern suburbs of Johannesburg that you have as a secondary or third property, or a back room. And maybe you can help us just share a guideline as to, what constitutes rental income that we need to be mindful of. The little Wendy house, the back room, a holiday home. What are some of those themes that we need to be aware of so that we don't find excuses for the tax man?
Exactly. Like I said, income. You need to be a friend with a tax man. You need to submit the tax returns and disclose to SARS and say, I'm earning this particular rental income, right? So typically you'll find people generating income from residential properties, like what you said, back rooms. It can be that. You might find that somewhere has large rooms, especially with this Airbnb space where people are actually investing in Airbnb, right? So what you'll typically find, you find someone and say, listen, I've got extra 2 rooms that I want to let them out with Airbnb. Yeah. Then you are generating that Airbnb rental on a monthly basis or on a daily basis. In fact, they actually pay on a daily basis, right? So once you start generating that form of income, those are type of the incomes that you need to disclose agency to SARS so that you don't find yourself on a back foot with SARS. And like what you're saying, another thing that for those who might actually be more affluent, where you end up actually even having those holiday homes in Cape Town, Durban, you name it. So, and you find that during those times where you're not actually in those properties, you are also generating form of income because you might be letting them out on a short term or long term, depends on your nature of business, right? So as long as you're generating those type of income, you still need to submit and disclose that particular rental income that you have. But with that said, you also need to bear in mind that there are expenses, right, that you will incur as a result of generating that particular income. And this is where I say the anxiety can go down to say, listen, when you're generating that rental income, be mindful of the expenses that comes with that and then keep the records because you will be allowed to set off against that particular rental income that you're generating from those properties. Got you.
Shillyboy, just on the records, how long do you keep them for?
Look, you need to keep records at minimum 5 years. I know. But remember, the beauty is that we live in a more advanced technology, so you can always scan those particular supporting documents and just put them on a cloud, right? You're secure. So, which it shouldn't be too much of an admin. So that is the minimum requirement, and so that's pretty much it. Minimum 5 years.
Definitely. And I think that's helpful because a lot of us tend to think that, keep the receipts in a shoebox in the boot of your car or wherever in your home office. And we tend to forget that they fade, they get lost, sometimes are thrown away. And you never know when you might need them just to substantiate your case when paying your taxes to the tax man. If you've just joined our conversation, we're talking about all things you need to consider when it comes to taxes, specifically taxes on your rental income for South African owners who have properties where they derive a rental income from. What it is you need to consider, how it is that you need to declare, and of course calculate and take into consideration. My guest this evening is Shillyboy Mothiba, property and tax expert from Tax Edu ZA. Shillyboy, there's a number of themes that you mentioned, and I think it's a gentle reminder to probe us to be honest about our disclosures to the taxman. And sometimes we are honest to say, okay, I'm earning some kind of rental income, but how we calculate it, can sometimes be very creative. What are the rules here, Shillyboy, to make sure that we are paying what is legally due and that we also keep ourselves out of trouble?
Exactly, legally due and also not unnecessarily paying, right? Correct, because we've got constitutional right actually to do our tax plan as long as we don't push and play the lines. So you're correct. I think the starting point is to have that what you typically call gross income. To simplify it is basically what you have received or you have earned. This will mean, let's say you've got that back room or you've got one apartment in the north and you rent it out and you're making like 10 grand. So that's your starting point. But to do that, in order to earn that particular 10 grand, you will agree with me that sometimes you'll get that estate agent or property management company that assists you to manage your property. That's what we typically call property management. Then they will pretty much charge you about 7%. So you will be allowed, because you'll agree with me, you are incurring those expenses in production of that 10,000. I agree, right?
Mm-hmm.
So then those supporting documents, invoices that they are charging, you need to keep them aside and make sure that you actually can justify that particular line items. Then typically properties will come with municipal rates and taxes and things like that. Sometimes body corporate, depending on where your property is situated. So you might want to think about that. If you're into Airbnb, or you're also in student accommodation and you're providing things like Wi-Fi, those costs you might also need to make sure that you account them, because then that will help you to reduce the tax. So those are typically some of them. And some of people, you need a caretaker, you need a gardening service to ensure that your property is top notch. And another one where we can talk about is also the issue of repairs and maintenance. So where you sometimes, fix the broken glasses, you need to fix the door handle and things like that. So make sure that those supporting documents, those invoices that you're buying at the corner hardware there, sometimes you buy at the hardware at the corner there, then you actually even forget about this, and then you can't even account. But those expenses, actually, when they accumulate over a year, they can be quite significant, and they can actually help and go a long way in terms of reducing potential tax liability.
Yeah, no, that definitely helps just in understanding the documentation and the calculation of that. And of course, maybe even looking to share those calculations with SARS to make sure that they work as well. What I'm also keen for us to shift and discuss as we grow on this topic is also, I guess, upcoming costs, right, for first-time homeowners. And we're all well aware that as a first-time homeowner, you get excited about the property purchase price, and then you forget that there might be transfer duties, legal fees. But are there additional taxes that are often not discussed, and maybe that we can remind our audience about this evening?
You are correct, and I think, if I may, let's just separate the issue of transfer costs, which people sometimes confuses it with the transfer duty. You're correct. So within that upfront cost that you are referring to, and which I always advise some of our clients to say, when you are going to buy a property, just be mindful of those upfront costs. You might want a budget, but we've seen in the industry where some of the banks actually also kind of finance for those upfront costs. So those upfront costs will typically include conveyancer's fee, which we call them transferring attorneys. There will be one leg of what you call transferring attorneys, and then you'll find, depending on the nature of the transaction, you can find bond attorneys. If you are buying your property through a bank, then you will be having people we call bond attorneys. Sometimes then there's those what you call bond cancellation attorneys, but it's not going to be relevant for you as a purchaser, because that is the responsibility of the seller. Now, within that, you will typically find the invoice that is coming from the transferring attorneys. That includes a couple of line items. And within those transferring costs, you've got a line item called transfer duty. So that is the tax. That is an amount that now needs to be paid to the fiscus, and that's the amount that needs to be paid to SARS by the transferring attorneys. So be mindful of that. And then it also depends on where you're buying your property. So you've got those people that will buy properties with the developers, or you buy if you are buying a property from Shillyboy, who's not a VAT vendor, then you are not going to be paying VAT. But then if you are buying, those developers, then in that case, then in most cases, those developers are what we call VAT vendors. Then they will be required to charge VAT. So in most cases, their purchase price is inclusive of VAT. So those are typically those costs that the taxes that as a first-time buyer you need to be mindful of, because it touches on your cash flow. But another thing that I need to bring to most people's attention is the record keeping around that. I've seen it a lot. Mm-hmm. So you buy property, right, Gugu?
Yep.
And then 5 years down the line, or 10 years down the line, you come to Shillyboy and say, Shillyboy, listen, my property has increased in a value, and I want to sell it. How can you tax plan this property? How do you restructure this portfolio? I'm like, okay, where are the supporting documents of your transfer duty? Where is it? where's your transferring supporting documents of the transferring attorney's fees? And people don't even have that. Mind you, those supporting documents are necessary so that I can reduce your potential capital gain tax later on when you're selling the property. So people need to be mindful of record keeping. It's very key. Record keeping is one of the important things to be mindful of if you want to really do a proper tax planning.
Definitely. And I think that's so important, just to remind us, the record keeping. Sometimes we put things in files, we forget where they are. And I guess with the process of moving, growing in life, some of these things do fall through the cracks. But really appreciate that you've given us some insight into this, Shillyboy. I guess as a reminder, many people might still feel overwhelmed, might forget some aspects of the conversation we've had here today. But what kind of property practitioners or tax experts do we need to speak to in order to seek some help, just in case some of our listeners might still be confused?
I think to be honest, you always want the industry specialized tax practitioner. Mm-hmm. So the likes of us who are 99% predominantly deals with property investment. You want someone who will understand the nitty-gritty and the structuring and the tax principles that are applicable within specific sectors. So I'm more than happy to have a conversation with those that might be interested.
Awesome. Where do we find you, Shillyboy? Tax Edu ZA?
We've got two companies, Tax Edu ZA, which is a tax researching company within the property sector, and then we've got what we call Intergen, which is our wealth advisory company, do tax planning and trust administration for property investors.
Got you. Thank you so much for that. Yeah.
Yeah, sure. Yeah, I mean, if you don't mind, I mean, I can also issue our WhatsApp line name for the business, and the people can reach out to us.
Oh, for sure. Perhaps you could share that line, and we can also share it on social media. That number again, very briefly.
074 589 6439. That's our WhatsApp line. It's easy to have access to us on WhatsApp line. 074 589 6439.
Got you. Thank you so much for that, Shillyboy. We'll be sure to make sure that we improve the circle of understanding, right, when it comes to all things to do with taxes, specifically taxes associated with your property or rental income. Really appreciate your time, Shillyboy. Thank you for your contribution today.
Thank you so much, Gugu, and thank you so much for having me.
Perfect. Shillyboy Mothiba is a property and tax expert from Tax Edu ZA.
Kaya Biz with Gugu, Monday to Thursday, 6 to 8 p.m. on Kaya 959.
On the street, on the air.